Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Tuesday. It is the 30th of July, another big day of earnings. The stocks gapped down on the open a little bit more for the first time in a while. Heard the dreaded trade war, right? Pushed stocks down on the open, fought back throughout most of the day. Not really getting it all back, but not really going too terribly far. Good afternoon, Jimbo. Welcome out, buddy. Always great to see you. Hi, Linda. Hi, Fortino. A pleasure as always, guys. Thank you for joining me. Another big round of earnings. The big one, of course, Apple, right? It's impossible not to know that Apple has earnings tonight. They hadn't reported, so I wasn't able to see what it was looking like for them, but we've got plenty of time between now and the open. But they're just the biggest name. We've got some cast of characters that we've talked about a lot. EA coming out with earnings. We've got Allstate, AMD. I know we all like a little AMD. We got some REITs like Public Service, Mondela's certainly a nice stock. So lots of stocks coming out here tonight after the market closes tomorrow before the open. Hey, Adib, good to see you, buddy, as always. Tomorrow before the open, another big round, not quite as heavy, but we've got some more REITs, American Tower, Simon Property. We've got some utilities, Dominion, Southern Company. We've got Humana, Church and Dwight, Garmin. So lots and lots of earnings before we wake up tomorrow. So it's still there, still in the middle of earnings season. That is for sure. Speaking of earnings season, we are seeing some big movers. We saw IT Gardner, big gap down, ton of selling. Under Armour had a little bit of a bounce, as you can kind of see. Gap way down on the open. Dish really struggling. HCA, Capital One, a little bit of a data breach, gapping down on the open. Probably going to cause them a little trouble for the foreseeable future. On the other side of it, you're in earnings season when you look and somebody's up 15% in the S&P and someone's down 19%. Diamond Offshore and SWN are not S&P companies, but both had good days. NOV, good bounce back day in energy. I guess for those of you who did trust that support level, you are certainly rewarded here today. MLM, a nice break out here today, as they're not on the top list here, but ECL was able to break out post earnings as well. So it's still, we are right in the middle of it. Going into the Fed meeting tomorrow should be interesting when we meet up tomorrow afternoon, one way or the other. Apple earnings and Fed meeting. Boy, that's a 1-2 punch to keep the market entertained, if nothing else. So, as we kind of saw gap down on the open and immediately bought back up. So again, not a real lot of fear, but for the first time in a while, we've had that. That storyline's kind of gone away. Today was a reminder that it still exists, right? It can still rear its ugly head, gapping down on the open, little bit of a bounce back, and then really flat throughout most of the trading day. Had a little bit of a short-term intraday breakout, but not really going too terribly far once we came off of those opening lows. So fairly uneventful as we're moving into tomorrow and that Fed meeting. On the daily chart, still sitting at that 20. There's really nothing to see here, I don't think, until we get through tomorrow, see where we go from there. Everything's still looking pretty strong. More resilience from the bulls here today. Still not able to clear resistance. The more conservative, if you will, signal for the bulls, I think, will be breaking the highs of Friday and yesterday. If we want to get a little bit of bullish confirmation, that might be something to be looking forward to. As far as the pullback goes, well, we're only one day into it, so we're going to need a little bit more. Definitely going to be keeping an eye on that swing low at 29.75 as that first line in the sand. Very similar type of day over in the Dow, just continuing to hang out. Of course, one of the reasons, at least potentially, the Dow's been lagging a little bit has been Boeing. Coming off nicely off of that support zone here today. Was that short covers? Was that legitimate buyers? Was it maybe a little bit of both? I guess time will tell, but that support zone holding up for Boeing certainly is not a bad thing for the Dow Jones at this point in time. That is a strong candle off of a support level. Not really my style, but certainly understand where that side's coming from. Again, if we want to play it a little bit more conservative, we can wait for a nice clean break. Dow in particular has a very identifiable breakout point here off of let's see if I can say that, tested the same resistance point two separate occasions. So we can certainly look at that as kind of the next, if we take that out, should be a pretty strong signal going forward, at least in the shorter term. A little more relative weakness in some of the tech stocks here today. Not quite as strong of a day, but a very similar day of price action. Down off of yesterday. Again, we can kind of use, depending if we're, want to be aggressive, we don't necessarily have to wait for these indexes to break these recent resistance levels. If we want to be a little more aggressive, I don't think. But if we do want to take a little bit more of a wimpy approach, which I will always understand and usually advocate for, the break of the tops of any of these or all of these indexes, probably a better, a stronger signal, if not better. Maybe better is too strong, but I think a stronger signal could be in play. Still, we're above all the moving averages. Let's see how we respond to our Fed meeting. It seems like the market has a pretty good idea that we're going to get quarter point. We'll see if that's what we get or not, and how we respond to it. If we get the half point, well, they might go crazy. Who knows? We'll have to wait and see. Of course, the RUT, I think the most interesting index here today, while the other major indexes were struggling, the RUT really firing back, closing above what I would at least consider resistance here. We didn't quite take out that little shadow, but we kind of knocked right on its door here today. Most importantly, taking out that little 4-day resistance level that we've watched develop over the last little bit. That's a pretty bullish signal, in particular if we can get a little bit of follow through, that upward movement going into tomorrow, right? Some actual follow through. It's not enough, at least in my opinion, to stick your nose above resistance. You got to stick it out there and really make it proud, right? You have to really follow through with that. So keep an eye on a little bit of upward movement. One thing you have to like, I think, at least from a bullish perspective on the RUT, if we can get a little follow through, is there's clear space into a pretty significant resistance zone in the 16 to 16.15 range, depending on where you want to put it. Wherever it is, there's room, there's some space for us to work. So a little upward movement, I would expect to be pushing 16 if we're able to follow through on this break. Personally, that's how I will be approaching it. And yeah, from time to time, Linda, I do make it out there. I tend to make it out there from time to time to watch a Raiders game. I enjoy going to Oakland. I don't know how much longer that's going to be a thing, but I do make it out there from time to time into the Oakland area to watch the Raiders play either the Broncos or somebody else, just depending. But I'll let you know if next time I make it out there. I don't know if you're in the southern part or not. I'm not too familiar. I'm familiar with Pendleton. I'm familiar with Oceanside area and the Oakland area, but that's about as much as I know about California. It all seems like one big place to me, being from Utah. But yeah, I will certainly let you know. And likewise, if anybody's ever out in Utah, you guys absolutely let me know. We will see what we can do about getting lunch or something. Always fun to meet up in person. So always feel free to let me know if you make it out here. Would love to meet up with you. As we kind of move here going into, there you go, Jimbo. Your son's got good taste, it sounds like. So, okay, cool. I will absolutely. And likewise, absolutely. We had some really nice follow through. We saw that nice little development on XLB. We talked about it Friday. We talked about it yesterday. On today's open, it seemed like, well, we'll be talking about it today, this afternoon, but we really fired back. Unlike the broader market that, it clawed its way back. It wasn't a ton of momentum throughout throughout the day in the broad market. That is not true on XLB. We fired back off of the open and really just kept running all throughout the trading day. A lot of strength. I guess it wasn't just us, kind of interested in this sector and this little pullback opportunity that has developed. We did see ECL come out, really positive response to earnings, breaking out. Might need to have a little bit of development here for a new trading opportunity, but always nice to see. Although it would have been a lot nicer to do this 2 weeks ago, ECL, when you were testing resistance back here. Whatever, right? Of course, that will be behind us. We have APD. Air Products here knocking on the door or even hitting the entry point, depending on how aggressive you are. But certainly we've got a nice bullish breakout opportunity over there, you also have an interesting chart, I thought at least, an international paper here today. Much like the overall sector and the overall market, kind of fired down on the gap on the open, caught our footing, tested a known resistance, old resistance, potential new support zone, and at least for today, proved to be a little bit of new support. Nice upward movement off of that, looking like a little bit of a pullback coming out of a longer term downward trend. Only recently we started to show signs of life. We are post earnings. I think this is an interesting pullback candidate personally, going into tomorrow or later in the week. I really like the way that we fought back off of that intraday low. There are interesting things out there. Sherwin-Williams continues just to creep its way up after its earnings breakout. Most areas are looking pretty strong. PPG knocking right on the door of a breakout as well, depending on how we view that one-day visit above this resistance zone. Looks pretty clean for sure, to me at least. A potential developing pinch to keep an eye on Nucor. This is probably, if it's going to play out this way, a next week thing, but we do have that rising 20, we do have that falling 200. This 200 has been a huge deal for Nucor as of late. No matter how it got to it, it always seems to be the end of the road. If we can get into a little bit of pinch and go back and forth, let these things tighten up, a break either way might be an interesting signal. We're going to need a little time to develop that. I think, an aggressive trader could call this a pullback opportunity, a nice bullish engulfing candle. And quite honestly, I would agree with them if it wasn't for this 200-day moving average staring me in the face. And there's just way too many times as of late that has just been the end of the road. I think it would, in my opinion, it's foolish to disregard that. Too much history there. Nice engulfing candle sitting right on the 20. I think we let a little pinch develop, try to get out of there personally. It's a little bit of a bounce back over in Dow. You got a support zone we're approaching, might be something interesting to keep an eye out for as well. So there's a lot of interesting things, including the ETF, still in my mind over in the material sector. Really like the way a lot of the things are set up, have made it through some earnings in some of the bigger names here as well. As we're going forward, we probably should, respect our recent swing high right up here in that 59.50 or thereabouts range, just because we've seen some profit taking there. But beyond that, I continue to expect to work up into that $61 range, unless the market really just freaks out, on the Fed meeting and we start to see, breakdowns. I'm going to continue to be looking at it from that perspective personally. Nice bounce back day on the energy sector, holding that little support zone that they've now tested twice here. Now we've seen upward movement off of it. I really believe we can call that support. I really believe that if that breaks, we can say, yeah, this is bearish. At the same time, buying off of it, I'm not doing it. I'm still looking at, now you're neutral. You're gonna have to do more than that, in my opinion. But I look pretty dumb today for saying that, right? So I get it. Keep an eye on this next level of resistance. As you guys know, we've got earnings for many of the companies in this ETF this week and some next week as well. So we still got earnings to potentially make an impact one way or another. But from a price perspective, this movement was important, in my opinion. This gives us a really clear idea of where support is. We've seen buyers come off of this same spot 2 times, regardless of how scared or wimpy I was about it. Buyers didn't seem to care. So a little bit of an idea of where support zone is. Resistance, we have to keep an eye on our recent swing here. Right now, we do have to keep in mind that we have put in a lower high. So I think it's wise to be looking at that, just shy of 64 as a potential resistance zone. For any bullish signals, for me, it's still above resistance. Double whammy, I get above resistance and above the 200-day moving average. Hopefully a little clarity will develop as we work through these this next week or so of earnings on these big names. Over in the financial, very similar to the material sector in the sense that after kind of gapping down on the open, fired back pretty nicely, ending the day in a pretty nice intraday upward trend. Continues to be a nice area overall to be in. We've got an Allstate and a CME. Both are reporting, some of the big names reporting tonight or tomorrow. So there's still companies out there. Capital One, of course, a data breach, big gap down on the open. I think if we're looking to trade directionally in the financial sector, whether it's a bull or a bear, this type of news tends to immediately get you off my radar for the time being. It can, become weird, right? You can see a gap up, gaps down. I'm going to let this one kind of, settle down a little bit. A big data breach, never a good thing. No matter who you are, going to have to be careful there. Outside of that, though, things are still looking pretty strong, in my opinion, in the financial sector. Of course, CME, Allstate coming out with some earnings. An interesting development kind of going on here. I don't know why that line's on there, but I think I can get rid of it now. On Berkshire Hathaway, a little bit of a run up, kind of a pullback, starting to show some signs of reversal after kind of breaking down. I think you're probably in a pattern like this. You kind of want it to develop a little bit so we can take out the resistance along with that 20. But I thought that was kind of an interesting development. JP Morgan's, the Bank of America's continue to show some pretty nice strength. I think you could easily make an argument that Bank of America, I believe our second target was at 31. I know that's what I had in my mind, at least. We've got a resistance zone. Beyond that, it's Bank of America. They're not a huge mover, but not a lot of resistance until we get closer to 32. So there's still some interesting characters out there. On the other side of things, you get a little sideways action over an AMP. We do have the CME group reporting here, so something to be keeping an eye out for. Still a few of the insurance companies, including Willis Tower Watts. I think that's how they're WLTW. So WLTW. There you go. Willis Tower Watson. They used to be two companies. A couple years ago, they turned into one. I always forget about their new name. They are also reporting here before tomorrow's bell. So overall, continuing to show some pretty nice strength. Still some earnings turnaround. Still like the banks personally as we're moving into now August. Personally, think that's a good spot. Very nice day over in the industrials as well. We saw Boeing holding that support zone. I understand the buyer's perspective at that support zone. It's held up. You have to respect it from a price perspective, if nothing else. Buyers have stepped in there time and time again against what I would consider better judgment. Doesn't mean it hasn't worked out for them. Obviously, if we can see some upward movement on Boeing, even if we're not trading Boeing, that can, of course, have a positive impact on the industrial ETF. Of course, we got a little bit of overhead just above us at that $79 mark. Not a lot from there until we get into the $80 range. So certainly some interesting things. You had DHI here. That can help us out. Really nice response. I don't know what we're supposed to do with this tomorrow. That's not my style, but a very nice response to earnings. One of the home builders here with a very strong response to its earnings here today. You've got some mixed action, right? We have some of the railroads kind of knocking on the door of potential breakouts. CNI, UNP, Honeywell has gone pretty much sideways. Cat's still in a weird spot, trying to figure out what it wants to do. But if we can see a little more downward movement, and we really don't even have to see that, I would like to see that. We've established a low. We're kind of in the middle of a messy nonsense right now. After that earnings response, we've seen a little bit of downward movement. I'd like to see a little bit more at our resistance level, because this could have been argued as a bearish retracement. I think you could have at least made that argument. I don't think I would have made it, but if we do see some upward movement and create that higher low and take out that resistance, could be interesting. Of course, John Deere got a little bit of time before earnings over on John Deere, knocking on the door of its very own breakout. Lockheed Martin, another breakout candidate, really liking the way that it's developed, even though it's kind of maybe more of a next week trade already. It could happen tomorrow too, but it's very clear resistance zone. Had a real big fire up after we kind of had that weird earnings day. Very clear top, little ways away from it. Interesting breakout candidate there as well. GE certainly, everybody knows that's Coach T's favorite stock. They've got earnings here tomorrow, so we'll see what they look like. If nothing else, just to either rub it into Tim or to laugh with him. So over in tech, a little bit of a downward move here today. One of the weaker areas areas as far as firing back off of that intraday low. Nothing really too dramatic to see here. Our semis, we talked semis yesterday. I still think for the most part, we're seeing them in a pretty interesting spot. We're kind of hitting here on it. We'll come back to that in just a second, Jimbo. It's a fair question, and we'll talk about that here in just a second. Over on SMH, though, before we get me too sidetracked, so nice orderly pullback into that 9. We're starting to develop what appears to be, I haven't done this live in person, but very clear downward trend. So if we can start to see a little bit of upward movement, that's an interesting pullback area, in my opinion. There are multiple candidates out there. I took a peek or took a snap of Applied Materials and shared them on the Tackle Trading Twitter earlier today. I thought they kind of lined up nicely. If we can see some upward movement in the industry as a whole, whether it's AMAT, of course, AMD with earnings, they might have something to say about how this all looks tomorrow at this time, right? AMD is certainly no joke, but there's some interesting candidates here. If we can see some upward movement in the NASDAQ, I really like the pullback, and we've got multiple opportunities, whether it's on the ETF. Hey, who knows? I mean, it's AMD, so we probably shouldn't assume anything here. And it looks like so far it's a little bit of a mixed response to that earnings announcement, but there's still a lot of time between now and tomorrow. A break above resistance, that could be an interesting signal as well. Right now, it doesn't look like that's likely, but there's still a lot of time between here and tomorrow's open for traders to process that report, including us, right? Over in the staples, pushed up, pulled back a little bit off of the day's highs. I really saw that in Estee Lauder. Here after kind of really running up early in the trading day, kind of did an about face and kind of sold off throughout the day. I saw that in a few of the different areas within the staples. Overall, we're remaining very strong, right? We just hit a new high, right? We can't be that bearish when we're hitting new highs, but we are a little extended off our recent bounce of support, a little far away from the moving averages. A pullback might not be an unreasonable thing to expect or even hope for, depending on what you're doing over in the staples sector. I'll watch those moving averages, kind of the new support catalyst. Support-wise, I think we can now really zero in at that first line in the sand. Should be that 59.30 range where we had our recent swing low. I don't expect that to give out, but if that does, that's where I might have some concerns for the staples sector. But right now, there's no real reason to believe that's going to happen. Just not a bad idea to kind of know where you're looking, right? Over in utilities, we've got some earnings coming up here as well, including Dominion and Southern Company, two of the larger companies in the utility sector ETF. So let's kind of get through here, see where we go. As far as the price action today, we're in this weird back and forth, right? This is sideways. I think the longer we're here, the more everyone believes it, right? I guess is the way to put it. Right now, we're kind of stuck in a sideways rut here. And welcome out, Robert. Great to see you, my friend. We did have PEG. This was kind of an interesting looking chart here. PEG come out, missed its earnings estimates. So this is utility stock, so I'm not as concerned about that as like Beyond Meat or something like that. Personally, working into a known support zone, slowed down here today, kind of sideways market within the, in the overall sector. We need some turnaround, right? We need some sort of shift in momentum. We not only got here, but we got here ugly. Could be a support zone worth keeping an eye out for if this holds over the next couple of days. Immediately below it, we have the 200-day moving average as well. So I don't think there's anything we can do maybe in the next day or two with something like this. But anytime we work into a known support zone or resistance zone that's had multiple tests, I think it's wise to throw that on a watch list. Probably won't do anything with it, but very clear line in the sand, from the last several months at least over on PEG. Broadly speaking, though, we're sideways, at least in my mind. Until we're out of here, I'll continue to be the boring guy that says that time and time again. We're even sideways over the last week within the sideways over the last month and a half. So right now, really a lot of sideways action. Over in healthcare, another pretty crazy and eventful day. Of course, we got lots of things going on with earnings here today. You did have our friends in Merck gap open today on a positive response to the earnings announcement, kind of putting in that higher high and higher low. Going to need some development. We've got some all-time highs not too far away from us, but some interesting things going on. We had a mixed response to Eli Lilly's earnings as well. I think we can very much keep a close eye on this. That is a crooked line, right? You guys aren't surprised about that. At approximately 105, let's go into a weekly chart. I think this is a really interesting breakdown candidate if that's the way it decides to break. A lot of momentum to the downside through earnings, very strong history at approximately 105, a falling 9 weekly. Maybe this is going to take a little bit, but a break below 105, there's really not a lot of support for a while. I think that Lilly is a pretty strong candidate for a breakdown watch list. Probably, again, barring anything weird, probably not something that'll break down today, if at all. But I do believe that with the history there, the way we're kind of lining up on the weekly chart, stacking down on the shorter term moving averages as well, a break below that would be a pretty clear bearish signal to me. And on the flip side, if the support zone does hold, well, I wouldn't want to buy off this support zone. But that doesn't mean anything other than I wouldn't want to buy off this support zone. We do have a lot of overhead. I don't know there'll be a strong buy, but for a bearish candidate, I think they make for an interesting candidate. Of course, Pfizer continues. Things just are not going well. Rough report after breaking support here yesterday, working into a support zone. So as we're going forward with healthcare, really more and more of the same. Got to be careful with relying on the strength or the weakness of the sector to prop your trade up. I think for the most part, as we're working, oops, I hit the wrong one here. As we are working with healthcare right now, I think, at least for me, I'm calling it neutral. That's where I am as of right now, calling it neutral, open to bulls, open to bears, but not expecting the strength or weakness of the sector to have a tremendous impact on my trades. Maybe they will, but that's how I'll be playing it going forward. If we are looking at this old support zone, whether you want to call it 91, which we do have quite a bit of history there, or the 92 that we're kind of dancing on right now, if we're looking at buying off the support bounce, we do have quite a bit of room until we get to resistance. So that would be a sensible, thesis, I guess. I would like to see at least personally kind of reclaiming that 20, reclaiming this high that was put in yesterday before I felt comfortable saying that. So broadly speaking, we are testing a support zone. This is kind of a nasty looking chart if we're trying to trade XLV right now. If you're not betting on the support, yeah, absolutely, Jimbo. Pfizer is in XLV. So this is something I would steer clear of, on an ETF level. Individually, I think there can be some interesting candidates, both from a bullish and a bearish perspective. We still, we've got some earnings coming up in this space, but we're starting to work our way through them. Over in the discretionary, sitting at that support zone, a little more weakness, and it wasn't just Amazon, although Amazon is certainly not being a positive influence right now on the ETF here. We're sitting on that 50-day moving average, not a great response to earnings. Maybe that can hold for us and help the sector out. But we saw a little bit of profit taking on Home Depot at resistance. Certainly, that makes sense. We can work with that. A little more of a pullback here on McDonald's. Going to need a little bit more development ahead before there's much that we can do there, I believe. Back and forth day in Nike. Over on Booking, kind of a nice little slow candle in that 20-day moving average. That's all right. But as you can kind of see here, most of these names, Amazon, I could see that. Most of these names are, had some sort of a pullback here today. Of course, GM with an earnings here tomorrow. So right now we're testing the support zone on the short-term support zone, I guess I should say, our recent swing low here. Now we all know the history that we have at that 121 range, that breakout point. So even if this support zone gives out, I don't think we can get too crazy until we see the breakout point give out. If we break below our 121 support level, that might give me cause to believe that maybe there's a little more selling to come within this sector. I would like to see it hold this support zone from a technical point of view, but even if we were to dip below it with the recent breakout, multiple tests, I think you have to respect 121 on the sector. Going into tomorrow, if this is a snapback, it's probably going to have to do it without me. If we can get a little development on some of these pullbacks, slow some momentum a little bit, then maybe there could be something there for us late week or early next week on the pullback side of things. Over in the REITs, broke above after kind of sticking our head above there yesterday, followed through pretty nicely here today, showing some upward movement. That upward movement it confirms to me that we've got a little bit of a triangle forming. So I'm going to assume that we're kind of stuck in this little triangle range until we get out of it. Again, we do have earnings, plenty of earnings on these REITs coming up in the next couple of days. So that might have an impact, again, much like utilities, they're REITs. So I don't expect a whole bunch of craziness to ensue, but it doesn't mean it won't. Right now, probably can look at this as a support zone. I personally believe, at least. Nice close above the 20. I still think it's best to be cautious. We're in a little bit of a neutral type of a pattern. We've got a bunch of earnings. Broadly speaking, at least, I think we need to be a little careful with the REITs going into the very, very near future. And lastly, over in the communication services, a little more downward movement here as we saw Facebook here breach, follow through off of yesterday's break of this support zone. A little bit of a fight back here today. I think you got to get back above those moving averages before you can start to believe in it. Personally, not a great look. Of course, EA had at least the first response to EA, the initial response was pretty positive. So it looks like so far, it looks like revenue topped estimates as far as we go. So maybe that will have an impact on it. Of course, the other big name here in Google, holding its own, trying to build a little bit of a floor. I'd love to see a little sideways action develop for a little bit longer. Maybe there's something in Google right now. I don't think we can say that, but maybe if we can go sideways for a little bit, we will see that. AT&T briefly, running up and hitting at a 52-week high here today as well. So more of the same on the actual ETF. We know we've got a pretty good chunk of resistance. So our signal is going for me to be a break of this resistance zone, just shy of $52. Maybe we can call it 52 for a nice easy number. But we are seeing a little bit of a pullback, and so I would understand if we get a little bit, probably need a little deeper pullback before we can get too crazy. But if we do get a little deeper pullback, I could see an argument if the technicals line up for the pullback argument. If we need to slip a little bit more, though. We have to respect that all-time high, I believe, as we're moving forward. So that is where we find ourselves going into our Fed meeting on the sectors. A little bit of follow-through on some of the things that were looking nice. Yesterday, a little bit of just kind of blah on pretty much everything else for the most part, as is oftentimes the way it goes during earnings season. Over in the dollar, I guess it wasn't just us looking at that resistance zone. We went up a little, down a little, and we went nowhere as we are going to. This is a battle, right? Nobody needs me to probably sell this to them as a battle. We've got a lot of price action here, a little bit of a doji, pretty extended. I think the best case scenario would be a pullback and let that rising 9 catch up and then give it an honest run to break through that resistance level, which I would consider a good signal. I would like to see something, a consolidation or a pullback. I expect it to take something like that. Of course, we have the Fed meeting, so the right, or the wrong thing can really make this move tomorrow. For new trades on the dollar, probably should be getting through the Fed meeting tomorrow before we making too many, too many moves one way or the other. We had a little bit of a gap on the open after the afternoon close yesterday into the afternoon open over on gold, knocking on the door of some resistance. I don't really think it's there yet. It did pretty much beat the heck out of potential pullback because I didn't feel like it was ready to go, and now it's gone. Going to need a nice clean break for me. Overall, though, like I've said many times, at this point in time with where gold is, I'm going to have my preferences, and everybody understands that. But there's there's strong cases to be made for gold on the bullish side. Again, we'll see how we approach the Fed meeting with gold, but break beyond that resistance zone, certainly something in play. Silver a little friendlier. We had that little short-term pullback, some nice upward movement, a little bit of a confirmation type of a candle. Probably, if you weren't aggressively playing the pullback, which was very shallow and was probably not most people's cup of tea, I think we're probably looking at it as a break of this resistance. I would absolutely call a signal that I would at least be thinking about. I'll be interested in if we do break that resistance level, because as you guys know, silver's hot. No one needs me for that. We've got not a lot of resistance. We've got plenty of room to go until our next serious challenge in the form of resistance I think we continue to look for bullish opportunities in silver. At this point, a break could certainly be on the table, in my opinion. On the other side of things, poor natural gas, even when it's up on the, even when you see a green candle, it was down on the day. That's its life nowadays. Nothing new and exciting here to say, just continues to show a tremendous amount of weakness. If we do get a rally back, keep an eye on that 9 EMA as a potential resistance catalyst if we do get a little bit of a bearish retracement. And lastly, over in crude, we did have a nice pop here today, closing above that swing resistance level, above those moving averages. I'd call this a bullish signal. I don't think this is still a good place to trade. I maintain that it's still more neutral than anything else, but a close above this resistance, working through those moving averages, if we can follow through, taking out today's high on crude, I think you have to call this at least a little bit of a bullish signal. I would have preferred that it went sideways a little bit before breaking out, but it never cares what I want. I ask, and sometimes I get it, and lots of times I don't. Pretty nice little bullish signal, in my opinion. I think you could make a case, at least, that we don't really have any resistance to worry about until we get back into that, just shy of $61. I think you could make that argument. I do think we need some follow through before we could make that. And I do think overall we are sideways at this point in time. And I'll maintain until, we basically have to break that 61 or our swing low down here at, just shy of $55. I think that's the real directional signal. But right now, momentum has shifted into the upside in my mind. A little bit of a break, a little bit of follow through, not a ton of resistance in the very, very short term. I'll call that a bullish signal personally, with some follow through. Don't think it's a great trading environment, though. Quite honestly, I think we need to come out of this range. If we look at this from a little bit of a broader perspective, we're smack dab in the middle of stuff, right? And so, we do have weekly moving averages. We've got all sorts of nonsense. I think the best way to look at this is continue to be looking at it from a cash flow perspective. And not a directional perspective, unless we're working down onto the intraday level. So that is where we find ourselves in our commodities. Over in Jimbo, there's going to be a couple of ways that you could look at it. And basically, when it comes to any break, the longer it struggles, the bigger a deal, in my opinion. And so my rules, are always going to reflect that. But the basic rule I have on any breakout trade, and there are very few exceptions, like high base type of breakouts, those 3-4 day ceilings and floors we talk about. I don't require a close above resistance or below support for those particular type of patterns. But more generally speaking, for breakouts, I need to see a close. I want to see a close and a follow through on my breakouts, basically anything except for the high base, low base type of breakouts. Personally, so on a LMT here, basically I'm waiting for it to close above this little green line that you see here. I think that's got me to about just shy of 374. I need to see it close above this resistance. Now, if it closes tomorrow at 387, I probably just don't get to even think about taking the breakout. So if it closes tomorrow at 375, great. Okay, there's step one. Follow through. The next day, I want to see follow through by 10% of an ATR. So for me, it's 1 day close, follow through by 10% of an ATR on really all breakout plays that aren't kind of the high base variety. And this is starting to get into it's not the high base variety, at least as of right now. It is not now, and so that's kind of my approach to breakouts in general. And to your other question, Jimbo. I always like to see, so basically I want to see the close above resistance or below support if I'm going the other way, followed by follow through on the next trading candle. And the way I look at it is I want people to see a breakout and be excited. I want them to see Lockheed Martin close above resistance, everybody to not be able to argue it. I want to say, that is a close above resistance, right? If we have to have the argument, I'm not interested if it's that close. So close above resistance. So everyone's excited. Hey, did you see Lockheed Martin or whoever the stock was? Yeah, closed above resistance. Let's go get our buy orders in so we can get going on this guy tomorrow morning. That's kind of what I want to see, Jimbo, on my breakouts. I want the excitement. So the close is confirmation. I want people to be excited about buying it, when they see that. That's why that follow through is so important to me in my own personal personal rules. Maybe I'm just a weirdo. Well, let me rephrase that. I am just a weirdo, but that's how I interpret it. So hopefully that gives you some ideas. And UNG is specifically focused on natural gas, Jimbo. So it is not really much to do with anything other than itself. So yeah, and if it gaps up to 380, good for the people in it. You know, I don't worry about the things I don't trade, Jimbo. I'm only worried about the things that I do trade. We can afford to be picky. There's always another opportunity. And of course, you know, when we miss out on a runner, of course we say, I wish I would have, right? But I want a nice clean signal, want something that's repeatable, time in and time out. The risk to reward's gone. Good for the other people that got into it. I can be perfectly happy for you or anybody else to make lots of money while I'm just hanging around. I've got no problem with that. There's always another opportunity. So I don't worry about what I'm not catching. I just want to worry about what I am catching personally. So I hope that gives you something to think about there, Jimbo. Those are my breakout rules. I'm a little conservative, as you know, but I do believe that the close is so much stronger than the breach that I believe it's worth paying for, even though sometimes you get priced out of the trade. You also miss out on plenty of fake out. So it works both ways, right? I just remember the time it breaks out. I just remember the times at ECLs and I say, okay, well, I can't get into ECL now because there's no risk to reward on this break. I remember these times. I don't remember the times where it sticks its head and then hits my stop loss 3 days later. So that's how we work as people. Ladies and gentlemen, that'll do it for the market recap today. But as always, it is my pleasure. I appreciate everybody's time. Always great to see you guys here live. A lot of fun to go through this process with you. Always appreciate those of you who catch the recording a little later in the afternoon as well. Thank you for joining us as well. Let's see. We've got the coaches show going on tonight. I believe talking callers. We're popping callers, I believe, over in the coaches show here tonight for all of our pro members. So that ought to be a lot of fun for you guys. Give you a little something. This is earnings season, right? Callers make a lot of sense during earnings season. So that is something to always be open to as we're moving through this earnings season. Although we're getting closer to the end, by the time we're done with Apple, we usually can see the end in sight. If you're not a pro member, of course, we always invite you to head over to Tackle Trading. Shoot us an email, team@Tackle Trading. Tell Mark I sent you. He'll get you hooked up with a free trial. Might even give you an extra couple of days if you tell him I sent you, so you can come see what it is all about. We'll be getting a video up over on the Instagram here really soon, so be sure to be checking over on the Tackle Instagram. We've got a stock of the week coming your way very, very soon. Of course, I always invite you to join us over on Twitter at Tackle Trading, me at Frank Martin 23 on Twitter if you're ever looking for me. Always great to see you guys over there. Just another great way to hang out, right? And that's always a good thing. Jimbo, over on the Pfizer side of things, this thing's ugly. A lot of negativity, a lot of negative news. Now, we do have a pretty respectable support zone on Pfizer. Got to respect that zone. Think you need to want to let it settle in a little bit. Test this support level, whether we're looking at it from a bullish point of view to maybe do some, boomerang style trading or buy the support bounce, or if we're looking at it from the breakdown point of view, well, there's not a lot. If this support does give out, there's some room to the downside here. A lot of weakness right now. I don't think you can make a strong bullish case, but I do think you've got to respect that old history at that old resistance, old support. Definitely something that we're going to want to be watching out for. So yeah, there's some support, there's not a lot, until we get down into, like you said, into that range. We got an old resistance level at the 37 marker, some old support at the 35 marker. I believe that's about where our 200 weekly moving average is going to lie. That's actually smack dab in the middle. So there's some stuff to prop it up. But if this does give out, I think we expect a little more downward movement before one of these other zones becomes pretty enticing. Now, I don't expect to go too much past that 35 or 36 zone on a Pfizer. Doesn't mean it won't happen. So if we work down into that zone, that's where we can kind of start thinking. I know Mark's thinking boomerang. I would agree. If we can work down into that zone and start to see some decent signals, I wouldn't be opposed to that philosophy either. So, all right, guys, get the heck out of here. Enjoy the coaches show here tonight. Thank you, as always, for joining me. Appreciate everybody hanging out, talking, trading with me. Have a great Tuesday afternoon. Be ready for the Fed. Check up on those Apple earnings. See how the market's responding to that. Tomorrow could be interesting, and it could be a real big letdown. Apple doesn't do anything crazy. The Fed doesn't do anything crazy, and it's not that exciting of a day. So we'll see. We'll see together. So thanks a lot, guys. Get out of here. Have a fantastic Tuesday afternoon, and I will see you all same time and place tomorrow. Thanks, everybody. Hey, thanks, Amy. See you later, buddy.